Next, but remember, there are few important points that you need to take into account. We shall also give you the link for our hassle-free tool, which will help you to decide between these two options by answering just few questions. And the final session would be the question and answers. Starting with the brief discussion on what is old tax regime and what is new tax regime. Now let us know what is old tax regime. If your income is up to rupees 5 lakh, then you are not supposed to pay income tax as you are eligible to claim rebate. The difference between the old regime and the new regime is the tax slab rate. When your income is above rupees 5 lakh, then the following tax slab rates shall apply. All tax rates are bifurcated into three groups of people based on their age. First, below 60 years of age. Second, 60 years or more but less than 80 years. Third, 80 years or more. The difference between these three categories is the basic exemption limit. For the first category, the basic exemption limit is 2.5 lakh. For the second category, it is 3 lakh. And for the third category is 5 lakh. If your income ranges from 2.5 lakh to 5 lakh in the first category and or 3 lakh to 5 lakh for the second category, the tax rate applied is 5%. If your income ranges between 5 lakh to 10 lakh, then the tax rate apply is 20%. If your income is greater than 10 lakh, then 30% rate shall apply on such above income. Now let us know about the new tax regime. The rebate is same in both the tax regime. That means you're not supposed to pay income tax if your taxable income is up to rupees 5 lakh. But if your income exceeds rupees 5 lakh, then the below tax slab rates shall apply. Here, tax rates are common for all the age groups, whether it be 60 years or more than 80 years of age. Therefore, the basic exemption limit here is common for all the age group, that is 2.5 lakh. Now, compare this with the old tax rates. As we can see, the income brackets from 5 lakh to 15 lakh has been changed, and also the tax rates have been reduced in the new tax regime, wherein from 5 lakh to 10 lakh the old tax rate was 20%, but in the new it is 10% and 15%. Where the income is greater than 10 lakh, the tax rate was 30% in the old regime. In the new regime, it is bifurcated into three categories, which is 20%, 25%, and 30%. Coming to the next process, how to decide. Here we have elaborated steps to decide the best option. These are step 1. What are the unavoidable tax saving expenditures you have? These are those expenditures which you have incurred not with an intention to save taxes. Examples: home loan interest, principal amount, rent for my accommodations, children education fees, medical expenditure for my senior citizen parents, etc. Step 2. What are the unstoppable investments you have? These are those investments which you have already committed for. As some part of the investments or money you need to invest to keep the account active. Examples: contribution to PF, Sukanya Samriddhi, life insurance, medical insurance, etc. Now let's understand this with an example. Assume I have an income of rupees 8 lakh and I'm salaried, so I'll be eligible to claim a standard deduction of rupees 50,000. I'm also paying rent for my accommodation, due to which I'm eligible to claim HRA exemption. I've paid tuition fees for my children. Now, check with the unstoppable investments. I am currently paying contribution to PF, life insurance, medical insurance, etc. As you can see, my tax liability in the old regime is 15,000 approx and 46,000 in new regime. So the person in this case should go for old regime. Since the above taxable income is less than 50 lakh, then tax surcharge is not applicable. Surcharge is applicable in both the regime. Now you must be wondering why there are no exemption and deduction available in the new regime. So in my next slide, I will explain you what is not available. Exemption and deductions not available in the new tax regime. I have bifurcated this within 4 categories. First, for the person having income from salary. Following are the list which is not applicable to claim in the new regime. Example, standard deduction, entertainment allowances which is applicable to the government employees, professional tax, house rent allowances, HRA exemptions, leave travel allowances, and many more. Examples of many more are children education allowances, hostel allowance, conveyance, transport allowances, etc. Now coming to the next category, for the people having income from house property. Interest on home loan for the self-occupied property and the vacant property. If you are paying any EMIs for these property, then interest amount is not allowed to claim as an exemption. Whereas interest paid for let out property is allowed. But if you incurred any losses against such let out property, then set off of such losses is not allowed against the other sources of income. However, carry forward of such losses is allowed. Now coming to the third category, which is person having income from other sources. This is family pension exemption. If you have received any family pension, then you are eligible to claim deductions. But in the new regime, it is not possible. Second, clubbing of a minor's child income. If your minor child income is clubbed in your income, then you are eligible to claim exemption of rupees 1500 per child, but which is also not possible in new regime. Now, final, the fourth category, which is applicable for all the people, which have deduction under Chapter 6A. All the deductions from Section 80C to 80U are not allowed. Example, life insurance, provident fund, public provident fund, post office time deposits, ELSS, pension funds, Sukanya Samriddhi scheme, medical insurance, etc. Expenditures like tuition fees, donations, rent paid, interest on or principal on home loan or interest on education loan, etc. Income based deductions, that is saving bank interest and interest from all deposits for age more than 60 years. All these exemptions and deductions are not allowed in this new regime. But there is an exception to this list, which is if your employer is contributing to the pension fund for yours, then which is eligible to claim as an exemption and deduction in new tax regime too. Here, I have not considered the exhaustive list, but have taken into account only the common ones. So, if you want to check out the exhaustive list, then you can visit our website link, which is www.taxbuddy.com. Now, let us understand with the another examples. We shall follow our steps of calculating unavoidable tax saving expenditures and unstoppable investments again. Assuming my income is rupees 18 lakh, I am paying EMIs, which is bifurcated as home loan interest and principal amount. Now check with the unstoppable investments. I have subscribed for my girl child in Sukanya Samriddhi scheme. That means I need to pay a particular amount to keep this account as active. And I have also paid for life insurance, medical health insurance. As you can see, the tax liability in the new regime is 2.88 lakh, which is lower than the tax liability in the old regime is 3 lakh approx. Now you must be thinking, why is it so? Because the income here was higher and the cumulative amount of step 1 and step 2 is lower. due to which the tax liability is lower in the new tax regime. So, person in this case should go for new regime. Now, coming to the next process, which is but remember. But remember, following are the few important points that you need to take into account. These are: after completing the steps, if your answer is old, then check for the opportunities to save more by investing more. For this, you can download our app called taxbuddy.com, which you can use the tax planning features where you will get the list of opportunities based on your current investments to save more taxes. And if your answer is new, then do not invest in tax saving options. Sorry. Do not compare based on the income. If in my previous example, I would have compared based on my income, that is 8 lakh, and I would have ignored my unavoidable expenditure and unstoppable investments, then my tax liability in the new regime would be 46 lakhs, 46,000. And in the old regime would be 75,000 approx, which means uh, tax liability in the new regime is lesser than the old regime, which is incorrect. As after completing the steps of deducting unavoidable expenditure and unstoppable investments from the income, that is 8 lakh, we found that old tax regime was better. So do not compare based on the income. Next, inform your selection to the employer so that he deduct TDS accordingly. If you if he failed to inform, then he shall deduct TDS based on the old regime. Selection. Selected tax regime option can be changed. Now you must be having some of the few questions in your mind that whether for the TDS purpose, no. You cannot change your selections for the entire 12 months. But yes, you can change at the time of filing income tax return. If in case I have selected new regime in the financial year 2021 and want to switch to old, whether I can do so? Yes, you can. Selecting any regime which is beneficial for you can be adopted. This choice can be exercised every year. But there is an exceptions for the person having income from business and professions. They cannot change or they cannot switch between new to old regime every year. What is this exception exactly says? Let understand with an example. In the financial year 1920 में मैंने ओल्ड टैक्स रिजीम से फाइल करना पड़ा बिकॉज इस साल मुझे कोई ऑप्शन नहीं था ओल्ड एंड न्यू का एंड जब भी फाइनेंशियल ईयर 2021 आया उस साल मैंने न्यू टैक्स रिजीम सिलेक्ट किया एंड मेरा रिटर्न फाइल किया एंड अगर उसके अगले साल दैट इज फाइनेंशियल ईयर 21 to 22 मुझे वापस ओल्ड टैक्स रिजीम में जाना है तो ये ऑप्शन the option to switch from one or new to old or old to new can be exercised only once in my lifetime. So people having income from business and profession, please make your choices wisely. Now coming to the next, advantages and disadvantage of both the options. First, advantages of new tax regime. By seeing the slab rates, you can understand the rates have been reduced and also you are not supposed to maintain documentation for all the proofs. It is also increased it also increased the liquidity in the hands of investors as he can invest in any other funds other than tax saving options, which gives him the flexibility to invest. Now, advantages of old tax regime. This inculcates saving culture by regularly investing some part of your income in tax saving options. This would help you to claim unavoidable expenditures and investments as we saw in our examples. Let's now discuss about the disadvantages. Disadvantage of new tax regime. This forgot the benefits of expenses, unavoidable expenditure and investments. Forgot the savings and resultant with wealth creation or future security. Now, disadvantages of old tax regime. Relatively less disposable cash, which means it reduces the liquidity in the hands of investors. Most of the tax saving options have the have the longer lock-in period, that is from 5 years to 15 years, which means this does not give the investor flexibility to invest. Now, we shall go through the hassle-free tool to decide between the old tax regime and new tax regime. You can use this link and can also download our app taxbuddy.com from our Play Store or App Store. Now let's check out how our calculator works. We need to go to the website called taxbuddy.com. Here we need to give the few of the questions. First, gross total income. Second, my age. Are you salaried? Yes. If I would have been paying EMIs, I would take the same example which we took earlier, that is 8 lakh. If I would have been paying EMIs for my home loan, then interest on home loan and principal on home loan. Rent paid per annum. Are you receiving HRA? Yes, HRA per annum. Basic salary per annum. This would help me to calculate your HRA exemptions. City in which I stay. This will give the HRA exemptions. Deduction under ATC, which is cumulative of tuition fees, PF, and life insurance. Which comes to 1,04,000. Deduction under section 80D. Any other deductions which are not mentioned above. Here we get the results. Your tax liability can be reduced by 30,000 approx if you choose for the old tax regime. Here is my computation of income based on the exemption and deductions whatever available in the old tax regime and whatever is available in the new tax regime, along with the graph of liability. Now, we would also show you how this tax has been calculated based on the tax slab rate in the old regime and in the new regime. We would also give you the TDS amount which shall be deducted on monthly basis. Now our final session, which is question and answers. You can raise your hands once I would like to answer. Or else you can also type in the Q&A part so that I can answer from there. Amit Thakur is saying up to what CTC new tax regime is beneficial. Listen, actually, it is not up to the CTC. It is based on your current investments and your unstoppable and unavoidable tax saving expenditures. Based on that, you can decide upon which tax regime is beneficial. Can I change my tax regime? Uh, 1 second.
He is the company which is not a public company.
Uh, One person is asking, ma'am, can I get this webinar video through mail? Yes. Can you just drop your email ID or email ID on the chat box so that we can email you the same, and you would also get this video on YouTube, on our YouTube channel, that is www.taxberry.com. The loan exemption and NPS is allowed. Yes, there is another one which is 80GJA, which is applicable only to the business and who are in the manufacturing business, and if they are employing for the new matlab, if they are doing the new employment, then there's one more exemption which is allowed in the new regime. Can you share the PPT PDF for the screens? So you will be matlab, you will get this PPT and entire video session in our YouTube channel. Total gross income by salary about 10 lakh, ATC 1 lakh 50. So old or new. So this calculations you can get it in our web. So please go to the www.taxberry.com. Over there you would find the tax calculator which I have shown you. It is confirmed that salaried person can change their choices while filing the income tax return and claim the. Yes, it is confirmed. You can change your choices every year. But for the TDS purpose, no. Once you declare your selection to the employer, he shall deduct based on your selection for the entire 12 months. Can I claim NPS investments in new tax? No, sir. NPS, if your employer is contributing to the national pension scheme, then only it is allowed. If you are paying it and you are investing it, then it is not allowed. Can you suggest more component for the salaried people? Yes, sir. You would get the exhaustive list uh, below the link of YouTube channel. I have opted for the new tax regime and Form 16 is generated on the same. Then we will not face any problem while filing ITR. No, sir. If you wanted to switch from new regime to old, you can do it at the time of filing ITR. Whether tax regime can be changed only once for the salaried people? No. You can change it every year. You can exercise this option every year. This exception of only once in his lifetime is only for the people having income from business and professions. What about mutual funds? No, sir, you cannot get the benefits of mutual funds, which is equity oriented, in the new tax regime. Suppose a person is earning 7 lakh per annum and no investments, then which option would be better? Sir, it's up to you. If you get your investments that much that you come below the 5 lakh, then there would be no tax liability. You don't have to actually choose between old and new. Should I get the deduction of interest paid on education loan? No, sir. In new regime, it is not applicable. Since you said you have mentioned that the employer needs to be informed of the tax regime opted in advance for the deduction of TDS, but while filing the ITR, I decide to change the tax regime, then the status of TDS that will be either payable or refundable. Whatever would be the status in at the time of filing ITR, you would get. Do you provide CA assisted filing? Yes, sir. We also have CA assisted filing along with the DIY mode, which is do it yourself. Yes. So it doesn't make any difference for the employer. Yeah, it doesn't make any difference for the employer. Employers just need to go deduct TDS based on your declarations. As per you, what are the best recommendations for the old and new? Actually, there's a no specific matlab, best recommendation that either you should go only for old regime or you should go only for new regime. Actually, this depend upon cases to cases. If a person having so many unavoidable expenditure, then for him old regime would be better. And if a person having higher income and less unavoidable expenditure and stoppable investments, then new would be better. So if you're saying mutual fund is not deducted, then what exactly is deducted in new regime? Sir, as I already mentioned that for as a common people, only the contribution made by the employer is available in the new regime, and one more section which is applicable for person having manufacturing business and who have taken new employment. Whether interest paid on housing loan, loss from house property be set off against the income from salary? No, sir. If your house property is self occupied or vacant property, then you're not eligible to claim the interest amount. If it is let out, then you can claim the interest amount. But set off of such losses against the salary income is not possible. But you can carry forward till 8 years, and such carry forward from the second year, you will be eligible to claim only against the house property income. Is the government planning to remove old in the coming years? No, sir, we don't think so, because this new tax regime is for those people who don't want to actually invest in the tax saving options which have the long lock-in periods and all. And for them, new tax regime would be better. Then what was that once in a lifetime? Sir, the person having income from business and profession, they have only once in their lifetime to switch from old regime to new regime or new regime to old regime. This option to exercise can be done only once in their lifetime. So please make your choices wisely. Can someone please confirm whether interest paid under Section 24B allowed to be set off from the income from salary under new regime? No, sir. As I already mentioned that if the uh, interest is paid on self-occupied or vacant property, then interest is not allowed. And in case of the let out property, interest is allowed, but set off of such losses with the other sources of income is not allowed. Please elaborate regarding presumptive income too in the new tax regime. You are eligible to claim the presumptive income. There is no change in presumptive income, whether it be old tax regime or new tax regime. It's just the tax slab rates which have been changed. Now I don't find any such questions to answer. So I would like to end up the session. Thank you.